Hello everybody, hope that you're doing very well and welcome back to another Contenders live stream tonight. So we're on part 4 of the channels series, obviously the last of the channel series, the part 4 today, and then by the end of this we'll have gone through all the channels, different techniques of using channels, and today it's focused on the Fibonacci side of channels. Okay, so we got standard, there's 3 types of that I use anyway primarily, Fibonacci channels, which are just standard Fibonacci channels. Okay, you'll see that on the first slide. Then we're going to go on to the Fibonacci extension channel, okay, which is very interesting. And then we're going to just move on to long-term Fib channels and how you can use them. They are different than a standard Fibonacci channel. So you have 3 types of Fibonacci channels, okay. To use them, you don't really have to have an understanding of Fibonacci itself. It's just very self-explanatory, I'd say. I'll show you how to do the setup of these channels because it's not going to be standard on TradingView, so you have to change the settings. And yeah, all I would say is that I only use these tools on a real big time frame. So this is not anything for scalpers, or I guess you could try it on scalping. I personally don't use it on scalping, but feel free if you want to try it, and then you can try it. Once you've learned how to do it, do how you would like. But yeah, for myself, I only use this on long-term trades. Okay, so we're talking swing trades, position trade. I don't position trade, but swing trades is primarily why I would be using the Fibonacci channels, okay, so more on a larger term time frame. So I'll be going through that, and then I want to end today with how I'm trading Bitcoin right now. Obviously, really lovely that today it actually gave us this parallel channel. So it's actually been contained perfectly. So like you notice this every week since I've kind of done it, there's always been a parallel channel here on Bitcoin, and it's just lovely, isn't it? Now you are knowing how to trade these. People are spotting them. It's just beautiful. As we can see, we went from low to high, up to the high, down to the low, midpoint, low, and we've just hit the high. Okay, what did we have as confluence? I'm just going to show you really quickly. We obviously had here, okay, oh, wrong pivot point there. From the low, we obviously saw the bottom of this parallel channel coming in on the golden pocket. Okay, so we haven't lost the golden pocket today, and we've actually gone higher low, and a higher low. So series of higher lows there, obviously contracting. One could say it's just sort of contracting like this, isn't it? Very much so. But nevertheless, very much contained within this channel, and yeah, literally when it went from high to low to high, golden pocket, bounce back on the golden pocket, now up to the top of the channel. Yeah, so that's just nice that we're in that as well. So yeah, I want to start with ontology chart of the week, okay? And this was one which obviously required patience. So when I done this, just yesterday it was before the Bitcoin drop, okay? This was before the Bitcoin drop. I was anticipating this to drop anyway, down to the what I wanted to do a chart of the week this week, which was a channel variant. Okay, so I went through my alts to find the nicest setup, or one of the nicest setups. I wouldn't, maybe it's not the best, but one of the nicest setup, which included a channel here. Okay, and I hope you can see this okay on my screen. It's the white lines here. Okay, the white lines of the channel. What we can see is ontology traded so perfectly on this channel. Yes, there were deviations from the downside, deviations to the upside, downside, but overall this channel is really profitable. Okay, even if you weren't in on the start of the channel, I've showed this channel so many times over the last few months. It's been very good. What we can see is from high to low to low to the midpoint. You can just see how perfect the midpoint is on this channel, by the way. Midpoint, support up to the top. Midpoint, rejection down to the bottom, okay? Rejections at the midpoint, down, okay? Rejections at the midpoint, one could class this possibly the top, back down, okay? Support off at the midpoint, bounce up to the top again, okay? And what we had done here, so why am I waiting for a move down? Because we had lost the midpoint of the channel, okay? So this for me is why I was playing patiently, waiting for this to come down to my entry, okay? Obviously the Bitcoin dropped, speeded this up a lot, okay? So I could have, maybe would have been waiting for 24 48 hours for this drop, but with Bitcoin it happened instantly. So yeah, in the end, with that drop, obviously Bitcoin moving down like 16%, this did in fact drop down. Didn't take my stop, but it obviously filled the entry straight away, and actually got a little bit of a bounce, about a few percent bounce. So it's been a trade which has actually been, I've not been underwater in it, but it's been profitable by like 1%, and then it's been coming back down. And if I'm honest, the trade, when I've done this setup, was not envisaging Bitcoin to drop like it did. Well, obviously I was overall like just expecting it to go sideways. If I'm honest, I was expecting a few more weeks of sideways action, okay? But obviously we got that break of our channel last night, so that has kind of affected my positions viewpoint on this coin right now. I don't view it as nice as of a setup. Like, I like trading the alts like this while Bitcoin's sideways. When I see Bitcoin so volatile, I don't want to be in a position for you know, a long period of time on an altcoin. I like day trading the alts. As you know, I day traded long today EOS, well, obviously still in Ontology, Litecoin, Engine Coin, in and out of XRP, basic attention token, and some of these coins today move 5%. So I'm like day trading the altcoins long, yeah, but this is like day trading, not like this is more of a short-term trade. It was only a 12% to the top of the channel, but this is going to require holding 24-48 hours, not so much day trading where I'm in and out at the day. And yeah, the altcoins today have actually been really nice, like 5% across the board, pretty good profits if I'm honest. But yeah, so this Ontology trade of the week. Basically, we had the bottom of the channel here, and what do I love? I love seeing it at the golden pocket. So we had this box of confluence, okay? So the golden pocket sat at the bottom of this channel, and that's obviously fibs from low to high, golden pocket on the bottom of the channel, okay? I was also going for the higher high, higher low. So as you can see, low, high, higher low, higher high. Wanted to see a higher low come in here. Obviously, I'm just trading it up to here, but if you wanted a higher targets, you know, go for it. But I'm just trading the channel as it is. But wanted to keep this low intact. And as I mentioned here, my stop loss is below of this move, and that's because I'm going for a higher low. Obviously, if we take the wick down, it doesn't keep maintained a higher low, higher high structure, does it? So basically I've got my stop loss there, and I totally understand that I'm putting my stop at a place where there is a lot of liquidity sat. I'm aware of that, but yeah, for me, that's my invalidation of this trade. So yeah, this is kind of what it was looking like earlier. It's changed a little bit now. Really, it's kind of basically at entry still. And as I kind of was writing this as I was going through it earlier, it's you know, it's been going up and down, up 1% and down, 1% down. It's not. Oh god, that's a spelling mistake right there. Yeah, it's just not my preferred setup anymore. If I'm honest, I much preferred actually Litecoin and EOS. They were my two favorite trades today, and those were like extremely oversold. Okay, let's just go over to the Ontology chart a second. Let's just load it up. Ontology. So it's basically at entry. I was debating closing it out as a break-even trade, but I decided to just maintain with it until we see another leg down or up on Bitcoin, basically. So I'm giving it a little bit of time just to see if this plays out. As you can see, we zoom in here. It actually found support perfectly off of the 786. So this was the moment of the Bitcoin drop. Okay, so this is where Bitcoin was dropping really, really, really heavily. As you can see, the speed it came down. It did originally, see really closely here, hit the 618 back up, fall down, back up again, and 750 was a take profit for me, by the way. Hit 750, back down to the 786, and we come up 2 hours ago as Litecoin and EOS were going up to about the high there, 742. Okay, and now literally back down to my entry, to the sat right now is at the entry. So yeah, take profit for me was 750, by the way. Why 750? Well, you can see here, oops, wrong click, on 750 you had a really, really, really nice support resistance flip here. Okay, so obviously when you're zooming out, support, okay, resistance, support, and you just envision it to turn into resistance again. And on confluence you also have here, okay, oh actually, where was I pulling these fibs from? Maybe the high. Can't remember where I put my fib from there. I was going to say that was an error of confluence, but in the end, yeah, about the 0.5. I think I must have pulled it from this high. Basically, as you all know, well, I guess I haven't done fibs yet, but you always do like several pulls, and then you see where the confluence is, okay? So yeah, this is it. So from the very high down to that low, you had the 382, and then from the high where you started to break down, the 0.5. So then you had like a Fibonacci confluence here of around 750, so 752, 751. In the high here was actually 752, so it hit the 382. But I like to front run my targets a little bit, yeah? So yeah. Overall, I think it was a very good idea, a very good setup. I'm still in the trade. I'm giving it room to breathe. It's yeah, it's nothing to worry about in my opinion at the moment. We are obviously still inside of the channel. Another possible deviation from the bottom. The only thing that worries me about it is Bitcoin itself. Okay. you know, I'd like to trade the alts for their own setups, and I will maintain in this setup until it's either invalidated or hit a target, basically. But you know, with Bitcoin in the back of my mind, it does give me a little bit of just feeling that this might not work out overall. We'll have to wait and see. We'll just have to wait and see. I'm in the setup, and I'll keep in it basically. But yeah, obviously quite the sell-off to the downside, and as I was talking about earlier, this channel and how perfect it's been, yeah, you can now see a little bit clearer, I think, how literally perfect it was. Okay, back down to the bottom's possible deviation. What I was after here was obviously our low, higher low, higher low. So then if we get this market structure going, that would be nice. But who knows with how Bitcoin is at the moment? It could wreck the alt pretty badly. We'll have to wait and see. But yeah, that was chart of the week from Ontology. Really wanted to do it because of this channel, and yeah, I think it's gone pretty well. It's average, I guess. Average. It's not really well. It's just average because we're literally sat at the entry. So yeah, and I would just note that if this does come down by a wick, because I'm using, well, I'm not going to go into it in too much detail, but what we can see here is we could see a possibility of a little spring. So that's where you take out stops and then go back up. So I'm really aware of this, by the way. And I will monitor that to see if we get a wick through this, or whether it does turn into whether you just close through it. Okay, so whether you just close through it or whether you get the wick through, because you do also have here, okay, like a little order block. So there's a little bit of confluence there for support, but yeah, that would, for me, would be another trade, and we'll have to just see how that goes if it comes down that low, okay? And if it sort of goes and closes through this level, if we get closes through that, then I'd expect the lows to be taken. But if it's a wick, then that's more bullish. But we'll have to wait and see. So yeah, basically that was Ontology. Oh, sorry, I've got a really itchy nose. Oh. Yeah, my cold is kind of getting better. If you can remember last week, I was really badly, really bad with my cold. But yeah, it's got better this week. Anyway, right. Cool. So moving on to Fibonacci channels, and this is just the absolute like standard Fibonacci channel variation. Okay, many of you have probably seen this. The other two maybe not so much, I would imagine, but the standard Fibonacci channel is actually very similar to our standard parallel channels. Okay, the only difference is I would exclusively use this only on higher term time frames. Okay, so this is sort of the view that you can see on Bitcoin at the moment. Okay, so this is the Bitcoin chart right now. And I'll load this up in a second for you all, but just to see here, you can see you connect the highs, drag it down to the low, okay? And then you're looking at these fib numbers for areas of support and resistance, okay? And as you can see here, you do kind of get an area of support and resistance off of the fib numbers, okay? So specifically, you can see here, support off of the golden pocket, bounce, okay? Coming back down, resistance off of the golden pocket, down, bounce up to the top, coming down. You see how perfectly you hit the 6.5 here. Okay, so hit the 6.5, back up to the 236. Okay, back down to the 0.5, and then not quite getting up to the top of the channel. Okay, and this is where I've, like you're seeing the next few slides, that you must be using confluence with this. So I wouldn't ever use it alone, by the way. But it's nice to see like confluences, so that this is like a perfect level. But yeah, then obviously right now we're sat at the 0.5, okay, so more or less around the 0.5 of this channel. So let me just load it up on a chart and just show you exactly how you use this. I feel like I'm going to sneeze. Oh, sorry about that. Oh yeah, I still got my cold a little bit. I can feel that coming. Where was I going? Yeah, I was going to say that oh, I needed tissue. Oh, I'm sorry. Yeah, so the way how we use this Fibonacci channel. So this is the standard fib, okay? So just come across to the left here, okay? Fibonacci channel, okay? This is going to be your standard settings. You won't have to adjust anything on the just the normal Fibonacci channels, okay? So what you need to do is start at the high. So put on your magnet tool. Start at the high and connect up to the next series of highs. So as you can see, this is our next high, okay? Then your third click here, as you can see, I've got the variation on here, but your third click is going to be at the low, okay? So connecting this low, and as you can see in the end, it connects this low as well. Put this onto standards. I'll double click just so you can all see, but this is all exactly standard. Well, the 6.5 is not, but Yeah, those are the settings if you want to add this in. Okay, we'll just remove this channel a second. And what we can see here is from high to low to high. Okay, but then you have the added in. Okay, specifically, not so much the 786 is not going to be such an important support. Really, I love looking at the 6.5 itself, like the golden pocket. You know, I'm a really big golden pocket trader, like 6.5. I love this level. But you can see throughout the board, 236, 382, 6.5, 786, 0.5 there, they are you know, have been pivotal in the market. Okay, specifically after we'd formed this high, this high, this high. Okay, then you see on the drop 0.5, 786. Okay, then you see back up to the top 6.5 here at the 236, down to the 0.5, partial rise. But as we all know, when we were looking at this with Confluence, what happened here? You literally took out the high here by a dollar. Swing failure pattern, come back down. Okay, so although we didn't hit a fib number here, we can see exactly why it dropped. Obviously, if we were looking at our daily level, on the daily we got just above that. Okay, and on the wick it was a swing failure pattern, and you sort of fall down. But yeah, the fib numbers itself, you can say are very good. Okay, and if you zoom in really closely, okay, you can see very close it got to the 6.5 again. So this is, we're talking within, you know, what is the low coming in here at? The low's coming in at 8.12. So literally within like $10-15 of the 6.5 there. It got within $10 or $15. And as you can see on this one, on this low, you're going $15 below the 6.5. So, you know, again, on such big moves, are you front running by $15? I don't know. That's something for you to decide whether how you do your trades. But you know, here you go $15 over, here you go $15 above. But I think it's really safe to say that this 6.5 is pivotal. Okay, and obviously now we're holding the 0.5. Okay, so this is just a long-term fib channel. Okay, what I would call a nice Fibonacci channel where you have all your standard fibs on. Okay, you're only, or I am only using it on big term time frames. So as we can see here, we're on the daily. And I just want to say something else, because you're not always going to see these fib numbers respected. If you had drawn a long-term channel like this, and you see things like this, and there's no respect of any fib numbers, it's not a valid Fibonacci channel, basically. So just do not put on the fib channel. Just ignore it and use a standard parallel channel. But if you put on the Fibonacci channel and you see the respect like this, okay, if you see this, then you know that this channel is really well respected. Look at all these turning points at exact levels. Okay, really amazing. Okay, just most of these turns are off of fib numbers. Okay, just highlighting all of them here. You can see there's a hell of a lot of turns. We could arguably say this one $10. We can see the amount of respect this channel's had. So when this channel has had so much respect, you're using the Fibonacci channel over a parallel channel. Okay, well, I am anyway. So yeah, this is how you use a Fibonacci channel. Just standard ops here with the channel, looking from highs to lows. What you can do, no, let me save this for the next one. Okay, I'll save this for the next one. So yeah, that's a Fibonacci channel basically. Very standard. So Fibonacci channels are best used on higher term time frames. The Fibonacci numbers are then used as support and resistance lines. You must always have Confluence to enter a trade. Okay, so as I've just highlighted, there were sections here. Okay, but I wouldn't be looking to only buy or sell off of a fib on its own. I would always want to see another area of Confluence. I'm a trader that would never trade off a 1 point low, be it anything, a 6.5, anything on its own. I wouldn't do it. I want to see another form of Confluence. Okay, this is why this is how you sort of trade. You don't trade off of one thing alone, unless you're kind of a gambler, I guess. We want to see multiple factors, multiple reasons that come into our favor for why we're taking the trade, why we're going to win this trade. That's what we're looking for basically. So multiple areas of Confluence, at least two. Okay, 2 or more is even better, obviously. So that's Fibonacci channels, and they're brilliant. They are brilliant. Okay, moving on is to the second type of Fibonacci channel, and this is the Fibonacci extension channel. This is one that I don't think many people have seen. I never see people using it. If I'm honest, I've never seen anybody use it. And they're really good as well. You know, in my public videos, I've never used this, and it's just, I don't know, it's just something I don't really talk about too much, but I also never see anyone talking about this. So it's kind of a really good good lesson to give, I think, today, because it's really unheard of, but it's really well, works really well. Okay, so this is the Fibonacci extension channel, so you are going to have to change your fibs on this. Okay, that's true. You will have to change your fibs, and I'll show you what I've got loaded up in a second. So again, this for me is only more so I prefer it on higher term timeframes. You can go down onto, I wouldn't go anything lower than the 1 hour. Okay, so anything below that, no. So I wouldn't use this for scalping. You know, I prefer to use it on the daily chart. Okay, but you can go on lower time frames, but generally no. It's best on high term time frames, just like the other fib channel was. I just myself prefer it on higher term time frames. Okay. Again, you can experiment, use this across all time frames and see what works best for you. Like what I'm doing with this is obviously I'm teaching you all the knowledge that I have in trading, and then you don't have to do everything that I do. You can kind of pick and take things, morph it into your own strategy, and you know, make your own trading plans at the end of the day, I guess. But yeah, I use this on higher time frames only. Okay. So yeah, how do you do this? So let's start off with how, and then I'll show you the settings. So basically, you're taking from peak to peak to peak. So you have to see so you know, highs are known as peaks, lows are known as valleys. So you go from the peak to the valley to then what would be the secondary peak. Okay, so the setup is, so this is known as the baseline, by the way. This is the baseline. From 1 to 2 is the baseline. So where you're going from peak to valley, or if the trend is up from valley to peak, back down to a valley. Okay, so obviously if this trend is going down here, okay, we're looking for targets to the upside. So this is known as the baseline. Okay, the baseline is from the 1 to the 2, so the peak to the valley, or the valley to the peak. That's your baseline of the channel. That's what's known as. Okay, and then you take your third touch. Obviously, if it's up here, then we're coming up here to a secondary valley. So we can. It's hard for me to find the words. Why are we choosing this? So I guess we would to go through why are we choosing here, not here, not here, not here. I think it's the easiest way to explain this. We're choosing here, yeah, because this is the highest, sort of most far out peak. Okay, if that makes sense, that hasn't had price action through it. If we had moved our pointer to here, well, clearly there's price action going all through this. If we put it on here, we have this price action here going through the line. So we move it to the farthest out peak where we can clearly see that there has been no more touches. If that makes sense, it's really hard actually to explain this. I think I'm going to need to go through some examples. That'll be so much easier. But just while I'm on this slide, you're going from high to low, moving out to the third peak where there's not been another touch. Like here, if we moved it here, this would have touched it. So we move it out here. For some reason, if you had done it from here, well, you would have had so many touches. So you move it out to your last peak, okay? And then what are you looking for? For me, very, 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 very important is that you have to see when you go from valley or from the peak to the valley or valley to the peak, when you get your baseline and move it up to your third point. So once you've gotten the 1, 2, 3, if you see that the 618 or the 1 or the 0, okay, 1, 6180, if they have had zero respect, if there had been no prior price action that has respected it, I would say that it's not valid. I would just say it is not a valid Fibonacci extension channel. So you have to see, and this is really important, you have to see that one of these three has been respected in the past. So you can see here on this example that the 1 was respected as resistance, 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 broken. Then you've got to move up. Where did you break up to? You hit the 618, resistance, 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 broke up, and that gave you the third peak. Obviously in the time you didn't have this channel, but then when we go back and look here, okay, what we can say is yes, this was a very valid 618. This was a valid 0 line. So that basically has told us this is a very valid chart to be looking for targets. And if you can remember this, by the way, this did in fact break upwards. Okay, so this was back on the 29th of August. This did break up and it did hit fib channels. Okay, in the end we were coming up to the 2. I've deleted this off my chart. This is off of memory now, but we actually came above the 2. So we did come above the 2 in the end. But yeah, this is where you would look for targets basically. So you'd look to target around the 618, the 2, the 2618, obviously the 4236 over here. But yeah, you're looking at this for where, let me just kind of show you visually. So you'd be looking for this as like a target. So something like this. Hitting this and that's a target for you. Hitting this is a target for you. Hitting this is a target for you. Again, never use this alone. Never use this alone. Use it in confluence with something else. Okay? But this is a good signal, okay, of where you could be using things. Okay? So yeah, this is like a perfect, really nice, really nice example. Okay, so this is Bitcoin. Again, like I said at the start, I want to see this on big time frames. Big time frames is when I like using this. So this is really clearly a big time frame, we can all agree. Okay, so what we're doing here, let me first show you the template that we need to use, so extension. So double click on this, okay, double click on your Fibonacci channel. You want to add in the 0, the 0618, the 1, the 1618, the 2, the 2618, the 4236. You could actually add in the 3618 here. So I'm not 100% sure why I don't have that added in, but you could add in the 3.618 as well. Okay, so you'd have, you know, there's that up in. You obviously could keep on going 4618, 5618, 618, but yeah, that's just what I'd have standard. Obviously, you can add it in if you need, but it's unlikely that you're going to keep going up and up and up until you know, kind of retrace the market. But yeah, this is what I have in if you want to add in the same settings as me. Okay, so think before I put it on my chart here. Where are we taking the baseline from? Okay, so think a second. We're going from here, the valley, to the peak. So where is your valley here on this chart that we're looking at, and where is your peak? I'll give you a second to think, okay? And then I'll put it on my chart while I take a drink a second. Cool, so right, let's go. So the valley, okay, is really clearly at the very low of this chart, in my opinion. So this is our valley, and we can put on the magnet and try and get it exact, okay? So this is our valley of the move right here, okay? Valley of the move. And where is our peak? Our peak is up here, isn't it? Okay, so now we have our baseline, and our baseline goes from the very low to the high. Okay, and where are we taking the extension tool from here? Okay, so where are we placing our extension? I would be placing it on this move down here. Okay, then why here? Because we went from low to high, and this was our valid number 3. So 1, 2, 3, okay, and now we can see prices broken out of here. We're looking at the 1618, the 2, the 2618, okay. So this is where we obviously clearly in this uptrend from the 0 to 1, this was our lowest sort of peak or lowest valley of the move. Okay, so you're looking here. If we had put the line, so let me show you examples. If we're putting the line here, I hate using this magnet tool a second, I need to take that off. If we had put the line here, for example, we can see, sorry, I'm pointing, we can see that there's price action going all through this. It doesn't work. We want to move it to our last peak, okay, or valley, depending on whether you're looking at a bullish or bearish chart. You can see this was our last area down, okay, before obviously you broke downwards from to the downside. So this is really hard to explain, this tool. Actually, when I'm trying to do this now, it's really hard to explain it. Yeah, you kind of need practice, I guess. But yeah, we're going from the very, very low of the move to the very high of the move. And this was the low, okay, the lowest low, which had no touches, up to the high. Okay, so if thinking of ways that I can help to explain this better, we go from low, high, low, high, low, high, and then you've broken out of it at this point. So you've broken out of it. Once you've broken out of it, this is where we can look for our extensions, the 1618, the 2, the 2618. Okay, does that make sense? Please ask a question if it doesn't, because I understand it. This is a little bit advanced, and it's just a little bit difficult to explain. Okay, and yeah, it is a little bit difficult actually to explain. So I'm just want to do it one more time. I wouldn't pick this because why? From the high, it was clearly broken. You don't want to see that. We want to move it to the end here. Okay, again here, if we chose here, well, we clearly break it here, don't we? So where do we not break it? At this valley, or this, you know, valley right here, it's not broken. Okay, this could have come down and touched it. If it got a touch and moved up, that's fine. You just don't want to see price coming back down here again. If price had come back down there before making the high, you'd move it to there. Okay, so if price had done that and then rallied up to make a high, then you'd obviously have moved it. But this was our last move down. Okay, there. Okay, that was the last move down, which was then not touched to form the high. So this is our baseline, this is the low, and then we're looking for extension targets. And yeah, many people actually had no idea why we had a bounce, or back on the 19th of September. If you'd like to go back to the 19th of September on your charts and just look how perfect this channel was, by the way, then you're going to see right now how good it was. Okay, so we literally, okay, on the 19th, come down, hit the 1618 extension, and we got a just over or just under 10% bounce. Okay, so we obviously sort of landslide down. Many people would not know what they're looking for here. Okay, but if you know now, you have the knowledge of using this, you could have seen that this is a long-term Fibonacci extension channel. Okay, and we come down to the 1618 absolutely perfectly. Okay, you know, I want to not try and I need to stop saying the word perfectly, because in trading, nothing's going to be perfect, or over time consistently, nothing's going to be perfect. You have to expect levels, be this any type of level, to slightly go through or slightly front run. Nothing's going to ever hit to the dollar perfectly consistently over time. That's an unrealistic expectation that I'm trying to not trying to give, but saying inadvertently. So don't ever expect perfection in trading. That's not realistic. But what we can say is very well respected channel here, give or take $5-10. We hit the 1618 here, and that obviously gave a 10% bounce on the day. Okay, in the end, it gave a 10% bounce, but it only made a lower high. So this is what, again, we're using this with Confluence. You can see here from this, okay, you form a lower high, bit of a random candle in the end of the day it was, and you kind of give the whole move back. But really over Bitcoin, how many times had we seen this type of move? I remember 3 times off of hand. Very good. The 26th, what was it? The 26th of August. Where's the 26th of August here? 26th of August. Was the last time that we saw a really big move like this. Okay, so here we obviously saw pumps given the whole move back. Okay, we see there's other examples, pumps given the whole move back, pumps given the whole move back. It's this pump given the whole move back. It's just a lot of these random pumps out of nowhere. It gave the whole move back. So this has been really typical of crypto over the last few weeks, month or so, where they were just getting pumps like with the high wick, and then it literally just gets no follow through. So it was moving up and then just literally trickled down. There was no move up and any bull flags at all. It's just move up randomly out of nowhere, gave it all back. Okay, move up, giving it all back, move up, giving it all back, and here again, move up, giving it all back on a smaller picture. Move up with a high upper wick, gave it all back, made a new low. Move up, high upper wick, gave it all back. Okay, move up, high upper wick, gave it all back. So we had seen this pattern basically consistently over Bitcoin over the last few weeks here. But that's kind of not what I was going to be focusing on there. But yeah, you can just see the perfection of this 16. You can see how well the 1618 was respected on this channel. Okay, so now naturally, what we were looking for is this to come down to around the 2, which depending on how long it takes, you do have to take into account time, but we would be looking for, if it happens in the next few days, possibly coming in at around 7985. Okay, and that's where you could see a double bottom form. Okay, and then obviously your 2618 is quite low, but you could be, depending again on time, it depends, do you see this or do you see like this? But obviously the it's impossible to say. But depending if it's sideways, and you'd be looking at around 8,000. If it's quite kind of quick, 6,000. But yeah, that's what we're looking at here. And you can actually see this come back and act as resistance as well. Okay, so these are dynamic support. Well, not so much dynamic now, they're locked in, but these are support and resistance lines. Okay, that you can have on your chart. I think this will take time to digest and practice. Absolutely, I really agree. Like with everything that I teach, you need to practice. It's no good really just watching the video and expecting to be an expert at them straight away. That's an unrealistic expectation. You can't just watch something and become an expert at it, even if I don't want to class myself as an expert, but even if you've got a good teacher or somebody that knows what they're doing in trading, you can't just watch something and become an expert overnight. Okay, it does require time and practice. So yeah, 100%, you will need to actually practice to be able to use any of the tools that I teach. You can't just watch something and become expert overnight. It takes time and practice to get good at it. Yeah. Let me just read a couple of questions before I go on to the next fib. Anyone know what was on the stream tonight? I missed the last one. Okay, so this is part 4 of channels, but this is fib channels. Last week, the last few weeks have been parallel channels. Anyone know, are your PowerPoints available somewhere, Daniel? I'm going to be uploading the PowerPoints to the stream. So far, I've never uploaded a PowerPoint, but I had requests of people wanting the PowerPoints, so I'm going to be uploading them to Discord until I can find out how to upload it to the website. It's just, yeah, really actually, I had somebody look for a plugin and couldn't find a way of how to upload it, so I kind of gave up on that, and I'll just put them on Discord. It's just so much easier for me as well. It takes a second. So Daniel, can you explain the difference in between fibs, extensions, and negative fibs? Maybe if I get time at the end. Are you from Somerset, Dan? Yeah. Might be better to use BTC swing low to high on log scale. So you could use log scale on this. I'm going to, before I take that question, let me move on to the next part. So the next one, because that's going to be on log scale. So that will be a good moving on to the next part, actually. which is going to be the Fibonacci long-term channel. Okay, and this is where, yes, I do use log scale. So this is a nice question that brought me onto this. So this is known as the long-term channels. Okay, really, you have to be using this on higher term time frame channels, at least the daily. As you can see here on IOTA, the example is off of a 3-day chart. Okay, but we're looking at, you're going to use this, so much more. I use it on the stock market. So any stock market, we're talking where you have years and years of data. I've got these on all of my charts because this is really, really, really useful for determining when a long-term downtrend or a long-term uptrend channel trend is over. So one could say that this is in a downtrend bear market. So, especially if you're on a weekly chart, for example. Okay, 3-day chart. It's a long period of time. This is over a year of data here. We are clearly in a downtrend. So bear market, essentially. We know that we can say with certainty, to a certain extent, we know that we're in a bear market because we're in a downtrend channel. And not until you break out of the downtrend channel do you have the possibility of arguing that there's a change in trend. You would know that you're not expecting a change in trend while you're still in the channel. Okay, and as you can see here, when you go from high, connecting the highs down to the low, you can see that once you broke out of that channel, you actually got a very big move up here, and this was about an 86%, if I remember correctly, move on IOTA. So that's literally, you can see here from the high, rejection, close through. The next day, you are seeing moves of 50% to the upside. In the end, you come up, where do you come up to? The high here, by a wick, and it kind of moves down a little bit. But yeah, this is an 87% move, not from the low, but from the break of the channel. So from the break of this channel to the high, 87%. And that's just looking at long-term trend channels, okay? I'll load this up in a second. Why did I use the 3-day chart? Because it's I'll go up over onto the chart in a minute. You're going to just see it's got the most respect. Okay, so you can switch between 3-day. Generally, if you see on what time frames I use anyway. So the time frames that I use: 1, 2, 3, 5, 15, 30, 45, 1 hour, 2 hour, 4 hour, 8 hour, 12 hours, 24 hours, 3 days, 1 week, 1 month, 3 months, 12 months. So these are my time frames that I use myself. So if it's not listed on the top here, I don't look at that time frame, basically. So I like looking at the 3-day. I think the 3-day is a nice midterm. So what you could kind of class it as half of a week. So when you're looking at the weekly chart, I like using the 3-day because it's kind of my half of the week reference point. It's just a really nice time frame to look at. Okay, so on high term time frames, I love looking at the daily, 3-day, weekly, monthly. Okay, on crypto, this is 3 months and 12 months. I generally don't use on crypto very much because you're going to just see things like this. Although what you could argue that it's helpful, it is, but it's just not used too often. There's not enough history for me on crypto to be using the 12 months charts very much. Occasionally, really occasionally I will, but not too often. This is crypto. And so yeah, let me load up this a second and show you exactly what we are looking at here. Okay, so when you were looking at a long-term trend channel, okay, I'll just show you the settings that I have on it, mine. Okay, so the 0.25. Click on this. So what we're adding in here, so just when you think back to last week, we obviously had the sideways channel of the 0.5, so it's very similar. But we're adding 0, 2.5, 0.5, 7.5, and 1. Have any colors you want, really, it doesn't matter. I like to have is the 0.5 in a color, and then obviously the 7.5 and the 2.5 in another color, and then our 0 and our 1 in another color, just to make it really easy to see straight away what you're seeing. But you can obviously have it in any colors you want. So yeah, that's what I like to see. And let me go over to IOTA a second and show you this one that I had for an example. I also have the example on Litecoin. I guess you can load up any chart. So what you'll notice is I'll put it into log scale. Why log scale? I guess this kind of could have its own lesson. But why log scale? Because log scale is going to be if you're looking at long periods of time, okay, if you're looking at something over a year plus of data, and that data is also extremely volatile, well, the log scale is very helpful. If you take this out of log scale, it's very hard to chart this, isn't it? It's very hard on a big picture to determine what's going on here when it just looks so flat. Put it into log scale and you can suddenly see all the movements. Okay, you see the difference? How can you look at this and then suddenly you can see the movements very, very clearly, where you're hitting the 7.5, coming back up to the mid, coming up, back down. You know, you can see it very clearly. So I like to look at it on log. The question that Matt asked of why did I use the 3-day, basically the answer is you could have used it on the 1 day as well. So you can see here on the 3-day or on the daily itself, they actually have the same touch points. But I don't know why I had it on the 3-day. I just had it on the 3-day. You could have actually probably had it on the weekly as well. So you could have had it on any of these time frames, the weekly, the 3-day, the daily. They are all exactly the same actually. So I think the reason I actually had it on the daily on this print, the 3-day on this print screen, is because when on the daily, it was hard to fit it all in this picture with my notes. So I just needed to put on a bigger term time frame to like squeeze in the data to have space to add in my notes basically. That's the only reason I think why I was on the 3-day, because the respect is there on the daily and the weekly. But yeah, you can use it on any of these higher term time frames, but it must be a high term time frame. So yeah, we can see here that the 1, 7, 5, 2, 5 and 2, 5 as well as 0 of the channel is well respected. Okay, so really clearly seeing respect from the high 7.5.5 here, 7.5. Okay, you can just see clearly that it's respected when closing outside of the channel, giving a great sign that the downtrend is over, or at least temporarily. It doesn't mean just because you break out of this, don't expect it to go to all new time highs. It's not meant really for that. It's just giving you a sign that you should expect a move to the upside to come. Okay, it doesn't necessarily mean an all-time high is coming. Okay, I guess that's kind of common sense. Long-term channels are extremely useful for determining when a long-term trend down or uptrend is over and the coin is ready to reverse. Okay, so when we look at this, as we can see in the end, we hit the daily and it's come all the way back down. Okay, so this is one where we broke out, hit resistance, and the downtrend kind of continued in the end. Okay, but this is obviously good for determining when you're kind of breaking out. Okay, so if we just connect up these highs exactly, let me put on you always want to really use the magnet tool on these sort of things, and then connect that down up to that high the best I can. And then obviously on this low, we're connecting that up to this low right here. Okay, and then what you can see here is from the high, okay, support coming in at the 7.5, 7.5, 7.5, 7.5, back up to the top. Okay, 2.5, 2.5 down, midpoint, 2.5, 2.5, 2.5. So if I just highlight all these touches a second, just so you can really clearly see them all coming in. Okay, you can see a little bit of support here coming in, resistances, 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 supports. Okay, here you're getting nothing. So here you're getting nothing. Okay, so quite hard to determine these highs. Is you're going to have some other form of confluence. Did you have a fib pull from here to here, etc., etc.? Because there's not getting an exact touch here. You're getting touches here, touches here. You're getting nothing here on the breakdown. Support of the overall low coming back in on this trend line. Okay, and that's the overall low so far of this move, coming in on that, back up to the high, touches here, not quite a touch here, I'd call it a touch here, a touch on the day before you break out, and then obviously the following day you break up very strongly. So you can see a lot of touches. That's what you want to see for determining when the downtrend's over. What you would say now is, well, the way that we've seen a reaction from this, it's now debatable if we've come down and we've made a new low. So what you could do here is actually adjust this and say that this is now still within a downtrend. Okay, so you can adjust this. And now you have it. You've just adjusted your downtrend channel. Can you do that? Yeah, absolutely. If you had come down here and made a higher low and moved up again, and I wouldn't have adjusted it, and I'd just say yes, that's over and done with. But because we've come down and we've taken these lows, okay, specifically because we've taken these lows, e.g. if you start taking out lows, then it's not so much bullish market structure. Bullish market structure is when you're going up like this. If you're doing this and then back down, okay, you haven't taken out the overall. If you're doing this and then you've gone back down, it's kind of still bullish, isn't it? Because you haven't taken the overall low. So you could view this as a wave 1 and a wave 2 coming up for a wave 3, for example, or just a higher low. But it's not so bullish when you start taking out the intermediate higher lows, basically. Okay, so that's why you could argue that this is still in a downtrend right now, just because you've taken out these lows. Although officially it's okay while it holds this overall low. Okay, that's the overall low. If you take out that, then yeah, it's very, very bearish, isn't it? But yeah, that's just all I wanted to mention on that. So yeah, that's a long-term log scale, okay, markets, and where you can decipher or have ideas whether whether the coin or stock or whatever you're looking at, commodity, has broken out of a long-term downtrend or uptrend. So I guess for yeah, it's just like helping you to determine. So there's not the only trade like signal, however you want to call it, that you would get is when breaking out of this is obviously a signal for look for longs. Sometimes you're also going to see this. I want to explain this. Sometimes you're going to move sideways out of this channel, and that itself is also classed as bullish because you've then broken out of a long-term downtrend channel. So if you're in a long-term downtrend channel, but you move sideways out of that channel, it's considered bullish because you've lost the selling pressure. This is obviously really high selling pressure. If you catch such high selling pressure but then you move sideways out, what does that show you? It shows you that selling pressure has dried up. Okay, if you're not making new lows anymore, then selling's dried up, hasn't it? And then you're looking for a move to the upside because there's no sellers left in the market. If there's no sellers left, you get buyers. And then obviously here what we can see is it moves sideways, series of low, higher low, a little bit of a wick through, swing failure. In the end, you sort of move up and, you know, selling dries up, you get an 80% move to the upside. In the end, you've given it all back. So that's a telltale of take profits. Another way that I'd always look is what you have to be doing on this as well is take a fib from the high to the low. Okay. So you're going to have to change this into log scale. Okay. And what you can see here, oops, didn't try and do that. Is generally I'd be looking up to the 382 if I'm honest with you all. So I'd be looking up to the 382 for my general targets. If it's breaking out, you should look up to the 382. That's a standard target. In the end, you only come up to the 236, which is actually a sign of really big weakness. This is a really big weakness sign. If you don't even make this 382, then it's really weak. Okay, and as you see here, as you went like this sort of pattern, and you sort of break down from this series of lows, this would be your sign that it's actually turning around. Okay, so why have I taken this? Let me just show you. Obviously, you got a support here. So support, resistance, resistance, support. Okay, that's a critical level, isn't it? Okay, support, support, resistance, support, 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 broken down. Okay, so I can remember this quite well. Broken down, back test, extreme move to the downside, and you can short this, by the way. You can short this over on Bitfinex. So yeah, you obviously get in here for a nice move to the upside, and then in the end you get a move down, retest, and big move to the downside too. So yeah, although this is nothing to do with a channel, all I would say is that I would always have the fibs on this channel. So I'd always go from the high to the low once I have broken out of a downtrend channel, and my target is going to be the 382. Blatantly honest, I'd look for the 382 as a target. How can we get signs if something's so weak it can't even make the 382? Signs like this are obviously a critical level of support and resistance. Support, resistance, really clearly here. Battling, consolidation that breaks through. What do you get? Swing failure pattern. So you take out this, obviously the last high before the breakdown. Take out the last high before the breakdown. Okay, take that out by a wick. Come back down to that major support resistance. So you're coming back down to that major support resistance. Okay, bounce, bounce, bounce. Lower high, upper wick, upper wick, upper wick, upper wick. Back down, below. Retest perfectly. Perfect retest, yeah. Break back down, perfectly retest. And there you go to the downside, 40%. So yeah, that's just another add-in of, I guess, of what you can be looking for to getting a clue if something's not looking as strong as you might have first imagined. But nevertheless, there's profit to be had on either side of that market. Does anyone have any questions? Can I use a BTC pair as an example? Yeah, let's just think of something that I can use as a BTC pair example. So I guess we could look at Litecoin. Yeah, it's a little bit, let's just see. So it's not the best, but we can just see here something along. It's not the best because what we can say is this is not really long enough. So I want to see something basically. Let's just think. What's something that's got really in a bit of really, you know, most of these are like not in real big down. Okay, so this is in a bit of a long-term downtrend. So we can take from this high down to this low. Connecting these series of highs here a second, just see. Oops. Down to this low. Okay, so if we just clear up this chart really temporarily. Okay, so this is what we could say is, so this is Ethereum BTC, and we can say that this is in a downtrend still. Okay, so I didn't really want to delete always do this. This is why I need my own trading view, because I always delete stuff off of these. But yeah, when we obviously see here from low to high, and I'm not sure what this fib is right here. Let's just, must have had these things on my chart at some point for some reason. But obviously we can see here, this is obviously our downtrend channel. So we could say Ethereum is in a downtrend channel right now. And it has had nice sort of support for the midpoint, to be honest. So we have gone from high to low to high to low, okay, back up to this 2.5, okay, kind of a midpoint, okay, back up to the high, midpoint, bounce, okay. So that's pretty nice actually when you zoom in here. You did hit the midpoint exactly on this low. But yeah, there's an example for you on a Bitcoin. So we would just clearly say that on the long-term macro big view of Ethereum, it's in a downtrend. It's just as simple as that. How I would use this right now, I just say Ethereum's in a downtrend. And to sort of envision any sort of trend change, you need to break out of that downtrend. Okay, what would be really nice is this was a really important weekly level, and you could break and coincide break of getting a break above that weekly and the downtrend possibly at the same time. But yeah, there's a BTC pair for an example of something that's actually in it right now. Can you apply the fibs on 2017 pool run? Just curious to see the outcome. Yeah. So what do you mean the? Let me go on to the longer term chart. Do you mean the? Let's just go over to it a second. So. So I know that this channeled really nicely in form of a trend line. So you had this like really lovely trend line. Where was the one that I originally take it from? I think it was this low. Oof, cannot remember offhand. But the fibs. So let's just see. So right, just determining here from this series of lows up to the highs. Okay, so it didn't. Let's just see if we go from the very low here to the very high. Okay, so this is taking it from the very low to the high, and what we could just say is this is in an uptrend still. Okay, so why? Because we've gone from the very low to the very high, and then connected it to our last major low. So you could use this for framing of the market, just to like frame the market really well. And if we just put on the magnet tool a second, I want to just try and line this up really exact. Oof. Up to that high exactly. Okay, back to these lows exactly. Yeah, I think that's about as best as we can get. Cool. So that's pretty lined up. So then going back, what can we see? From the low, hit the 7.5, back down to the middle, up to the top, back to the 7.5. So this is what I'm looking for. Has it been respected in the past? I can actually think we can say it has. Back up to the top, back down to the low, support, 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 hovering a lot around this, the 2.5, let's say here. Okay, actually this is pretty interesting. Hitting the high here, hitting the high here, hitting the support here, hitting the midpoint here. Partial doesn't quite get up to the top. Hit the midpoint here for support, back down, hit midpoint, hit midpoint, hit midpoint. Okay, around the 7.5, drop down to the low. Oh, that's pretty close. We're talking about within a few dollars here, but obviously this overall was our monthly level, so we know why this rejected. But that's confluence, isn't it? So this is confluence. Oof, you have to keep this in log scale. But when you go, obviously, this might be different actually in log. Yeah, it is. Obviously here on the log scale you got the 7.5, and as we all know on the monthly as well, when we pull up our monthly here, we got had our monthly level. So if I just add all this in for it, so this is what we're looking at for confluence, isn't it? So we obviously had our monthly at the top here, monthly level. Okay, let's go back onto the time frame we were looking at this on. What was I on? 3 day, I think. So you obviously had the confluence here of, let's just delete this a second, and this. So we had the confluence of the 7.5 of the channel, the 7.86 on the log scale. If we go back to normal, which I'll do in a second, it's the 6.18. But from high to low, we had the channel, okay, the monthly level itself. We had the 7.86 here, all lining up as resistance. Take this off a log a second, and you know from high to low, it was the golden pocket, okay, on the monthly. So you know we all know why we got rejected there, but yeah, obviously that log scale sort of chart could have gave you another form of confluence. So then you had a lot of factors of why this would reject. Okay, cool. How do you shorten your monthly, weekly, daily levels, like on ETH chart? What do you mean? How do I shorten my levels? I'm not 100% sure what you mean actually by how do I shorten my levels? How do you shorten your monthly, weekly, daily levels? Oh, I'm really not actually too sure what you mean. I'm not sure what you mean by how do I shorten them. Does anyone else have any questions about anything that I've covered tonight in terms of, again, I really think that you're going to need to practice with this. It's not probably going to come naturally to you overnight with, maybe the channels will, they're not too hard, but the extension is quite, it takes some practice to get used to where you're pulling it from. And then obviously you can just send me questions, okay, over in the champions chat anyway. Oh yeah, so this was one that I actually wanted to cover. I'll cover that in a second. But yeah, anyone else have any questions? If not, I'm going to go over Bitcoin in a second. I mean, do you draw them in manually? Yes, every level I have on my chart, this is all manual, so I have no automatic way of doing it. I actually enjoy doing it, so I don't want a automatic way, but yeah, all my levels are all manually put in here. So like the gaps, all this is all manual, okay? All manually put in. Already from higher time frames, they don't extend all. Yeah, so I use the ray tool. Yeah, the ray tool, then it extends all the way across the chart forever. You just use the ray basically. Ray tool, just use the ray, it automatically extends across the chart. The shortened version like this is just a trend line that I've put in. So this is just a trend line, yeah. So just trend line, when I was doing that earlier, that's just like a trend line. But I generally use the horizontal ray like this. But the trend line is if you don't want to have it all across the screen. See the difference? Cool. So yeah, I want to go over Bitcoin a second if there's no other questions. So Bitcoin. Obviously, all we can acknowledge very clearly now is that we have in fact broken outside of this triangle. Okay, this looks best for me on the weekly chart. Okay, so we obviously were inside of this triangle for a long time in the end. Okay, what we can say from the support to the end of about 119 days, more or less, 119 days. Long time to be inside of a consolidation period. Okay, what we can say is it broke down. Yes, there were signs that we could break down. Obviously, Litecoin broke down prior, and other factors. But in the end, we've obviously now broken down. If we're looking at this on the weekly chart, and I think this looks best on the weekly, you have to wait for the weekly close. We're only on Wednesday, so we have Thursday, Friday, Saturday, Sunday, okay? 4 days, just over 4 days for the actual close. If this, I want to just say, really stress, if you get a wick and you close your weekly above, let's just say 9,250, if this weekly candle closes above 9,250, it's very bullish. Very bullish if this candle weekly closes above 9,250. If it closes below, well, it's quite obviously bearish, okay? But all I want to say is you have to give it time. You could possibly close above 9,250, and then you end with a very big lower wick. Okay, it's going to look very bullish on the weekly. It's going to look very bullish and a very big fake out, what we would say, a very big fake out. I just wanted to start by saying that you could wait just 4 days and have a lot of confirmation of whether this is a fake out or not. Okay, but let's just move down to the daily. So obviously with the daily, we've had the candle close below, and if you look at this pretty nicely as well, today the 200 exponential moving average did here act as resistance. Okay, so that's pretty significant. We're now below the 200 EMA as well on the daily. So yeah, now we're down outside of it. I personally have targets aiming towards 7k, 7.4k. Why? Just really simple, low to high, aiming for the golden pocket. Very simple stuff. Why else am I aiming for there? I know that we have all of these lows to take out, okay, which sit above, okay, so these lows are coming in at around 7,400, 7,500, okay, so from 7,500 to 969 is sort of my target area. I am myself looking to take shorts, okay, to play this back down. Any bounce for me is a short, unless it gets above 9,250, where obviously I'll take a loss on my short. Don't get me wrong, I'll take a loss on my short, but that's sort of my invalidation. If it gets back in here, I'm bullish, okay, and I'd be aiming back up towards, well, at least these highs, then these highs, and then so on and so forth up to the heights, each high. But yeah, closing back above 9,250 is very bullish. Well, I probably would expect a grand move to the upside, if I'm honest. But it's very hard to say how I'd trade it in 2 months or a week down the road. We need to see how take it as it comes, okay? As you all know, trading is more about reacting than predicting is nice, and forecasting like this is nice, but at the end of the day, I'd reacts and trades independently. So yeah, my plan though, as it stands right now, with how I see the data right now, is that I want to short any bounce, okay, and play basically it down to around my target of these lows, okay, these lows to the golden pocket area, okay. If we start actually closing below that though, then I'm aiming down towards the 7868 and down basically, okay, until we find support. This is a very big pullback. If you look historically, specifically 2017, we've not seen any pullbacks of this size, okay. The biggest pullback was here. So if you just compare this, so this was our potentially, okay, we had a few big pullbacks, obviously here about 30%, here about 40%, okay. From this high to this low, we've now pulled back 42%. If I just delete this a second and show you that this was a little bit under, about 42%, and so about the same low. But if you can see the difference, this was quite quick. This was a drawn out consolidation down. So 2017, we didn't see this sort of price action, okay. So it's just something to note. I'm not saying that we're in a bear market or anything just yet, but yeah, this is obviously pretty significant drop to the downside, hence why I don't think you're just gonna really drop outside of a consolidation of 119 days and the next day just come back in. It was very unrealistic, and it kind of is a little bit unrealistic, but I guess on the end of the day we have to wait for the weekly close. If the weekly close gets above 9250, or very, very bullish indeed, I would be leverage longing. But until that happens, I'm looking to buy around the 618 myself, and then I'll see how it goes. Do we get a 618 and start bouncing, or does it just do something like this? That will be a telltale sign of what's to come. Okay, and then so I've kind of covered the scenario that I'll be looking for if it moves up. I'm looking for a short if it moves up. If it gets above 9250, I'd take a loss on my short and basically look for longs. Okay, I am, yes, shorting this down to around this region where, well, simultaneously as it gets down here, I would look for longs, okay, unless you obviously see no reaction, but I'm expecting a reaction around here, okay, so I am expecting a bounce. So yeah, I'll be looking to long here. Obviously, if we just do start bouncing up here, I've been longing altcoins long today, so I've obviously traded very well, and I've done this obviously to the group, told everybody. I was trading Litecoin long, and that moved up about 5%. Trading EOS long, also moved up about 5%. Was trading, obviously, Ontology kind of has stayed neutral. Engine Coin, a little bit neutral, a little bit of profits. In the end, it was in Enigma. So I've been trading like different altcoins long, and so it's not like I'm only shorting things right now. So I played the altcoins long, and that's why today I've traded Bitcoin short, because I don't want to be long on everything, But yeah, on the very short term, we obviously have this very nice channel. We obviously have this very nice channel going on. Oops, very nice channel going on right here on the shorter term, which has just been pretty perfect, hasn't it? So can't get much better than that. Will you have bids preset at a 618? I do actually have a bid preset at a 618. But this is like fresh money that I'll be putting into the market. So yeah, I will be buying the 618. Where if it drops, we have no guarantee that it's coming down this low. We have no guarantee that it's coming down that low. But I will buy the 618 if it gets down there, because at the very least I'd expect a bounce. Obviously it can go straight through it, but I would expect a bounce. Okay, at the very least, it carries down. So yeah, I will buy here. 100%. Okay, and obviously if I don't get that opportunity to buy there and it just comes back up into here, well, obviously I'll cancel these lower orders at that point and actually buy up here. Okay, but this is like fresh money or fiat that I've got aside, kind of wanting to get just a bit more exposure to Bitcoin, because at the moment I never have held Bitcoin basically, so like on the long term. But yeah, I view this as a good opportunity, because in my preferred count, this is obviously a wave 2 up for a 3, 4, and a 5. So that's obviously quite bullish. Obviously, the invalidation is if we just keep falling down. And I'm a trader. I can make money going long or short. I literally don't really care if Bitcoin goes up or down, if I'm honest. But yeah, I take it one step at a time, and I will literally trade any direction, if I'm honest. So. Yeah, that was my viewpoint on Bitcoin that I just wanted to cover, just because seeing as we had seen that this move down. Okay, it's raised. Okay, BTC 9250, you say on the weekly. Why 9250? 9250 is a really critical level. Okay, 9250 for me is like a really, really critical level. What was I looking here on the daily? We obviously had 9250 is coming in around 9250. Where was it? This high? the low. I think actually it might have been our fib pull. Remember 9250 is the level that I've been calling all day. 9250 might have been from my last high. I had this is my invalidation 9250. I think I might have just given myself a bit of space. As we can clearly see, okay, as we can clearly see, you could say anything above the low here, which is 9,111. Okay, so 9,111 is basically the level that you're back inside the triangle. I don't want to give my invalidation so close. Okay, I just don't want to. Okay, so this would be really, really close, very tight stop loss. Basically, I want to give myself a bit of space, so I've given myself 9250 as my invalidation. Okay, it's kind of taken into consideration these lows, they're a little bit higher, but just my line in the sand is sort of 9250, where I'd have to just get out of the market at that point of my short. You could get out earlier looking at 9,100. Obviously the very low of the channel was 9,080, so you could get out at 9,080, but I just wanted to give myself a little bit of space, so I've given myself that few few percentage points of space, just to see what happens. Just because I lean bearish, I don't want such a tight stop loss in case of this, but I do think it's unlikely. I do think if we start getting up here, you'll move quite quickly up, just like through like 10k, like you moved up through 6k. It's kind of another one of those scenarios that most likely if you do get up here, you probably will get out. So you could use 9,080, but myself, I just want to give myself a little bit of space for that reason, basically. Just a little bit of space. It's the monthly. Yeah, you also have like other levels in here. Yeah, so you probably are right. This is why I don't need shouldn't delete levels off my chart, because as you can see, yes, we did have our old monthly there as well. So thank you for reminding me on that. You see why, like, this is why I have my own trading view, because I'm all day deleting things, answering questions, and it's just like makes you forget when you don't have it all on your chart. So yeah, 9250 was our old monthly. Thank you, Igor. I knew there was some reason why I chose that, and I totally had forgotten. So yeah, old monthly as well. I guess as well, you could say that there's like dailies up here at invalidation of 9.4, weekly coming in at 9,530, but that's too much space for me. Yeah, there's too much space, but you could use like this as an invalidation level if you wanted more, even more of a space. Weekly is 9,530, but too much for me. But yeah, you have that option. So I just wanted to answer this question. I know the contenders chat gets like no love. The contenders and players chats get zero love at all. Nobody seems to use these chats. I don't know why, but yeah, no one gets any love. Obviously, in the champions, it's like non-stop talking all day of technical analysis and trading, which I love. But yeah, the contenders get no love. For some reason, nobody really speaks much. But there was this question, and obviously, I've started today doing the LLM trading updates, where I'm going to be posting daily the trading updates, basically, of what's going on. So with that happening now, I wanted to basically just answer that question, because otherwise it might be confusing for some people of what this is. Okay, obviously the champions, when I post this, they can ask me questions, but to the contenders, I don't go into the group or the players. So the question basically is, hi guys, do you know which 618 at 8.3 Daniel means? Not quite understanding. I thought it was at 7.275. He was looking to long. So what the question is referring to here is my local support at 8,312. And obviously here I wrote, I will take a long from 8,312. So this was lovely, I think, actually. Well, it did trade quite well. So 8,312, my friend, what I'm getting that from is the low here, low up to the high here. Okay, so the local support 8,313. Okay, I probably not put that on exactly. 8,313, 8,312. That was the 618. Okay, to answer the question of 8,312 here, why did I pick 8,312? Why is that mine? It's for this reason here, from low to high. So as I wrote here, local. So the local low to the local high, 8,312. As we can see, we did come down to 8,312. Actually got through it a little bit. But remember, if you're buying the golden pocket here, your stop is not so close. So you're not getting stopped out of this. In the end, you come back down to 8,312. In the end, I actually got stopped out here in just a slight profit, trading my stops, and in the end you get another touch higher low, higher low, higher low, and now it's just contracting in. We'll either probably see a break in the coming hours, up or down from this sort of contracting pattern. But yeah, I just wanted to answer that. I felt sorry. Basically that's what I'm looking at. Local means you know, that's the local chart, and obviously the 7,000 that you were referring to is the 7,000 from the, you know, global, from the overall low to the overall high. That's obviously coming in at around 7,000. Okay, and global support I've obviously put here 7.3, and you can see it's coming in. I've made a mistake here, 7.2. But yeah, basically that's what I mean by global, and that's what I mean by local. Okay, I hope you understand the difference. And yeah, I'll be posting these daily, so every day I'll be posting a new update basically, so that's really good. It's like basically just telling you what I'm looking to trade, what you know, if I see nice altcoins, I'll mention the altcoins in here. What we're in on the, you know, for the Elliott wave correction. So just to really quickly show you that, what I believe that we're in, obviously a WX, either a triangle or just an elongated flat down for the Y. So obviously my favorite count is that we move down again here, but the invalidation again of this count would be moving back up, and we could then just adjust this, but for the time being, so expecting lower prices. Okay, then I've got the Fibonacci levels, the 4 hour, 1 day, 1 week exponential moving averages, the daily, horizontal and supports that I'm looking at. Okay, long and short percentages, market sentiment. Okay, neutral, I guess is kind of a little bit bearish now, I would argue. MEX, okay, the open interest on MEX since last week, that's obviously moved down, so prices moved down and open interest moved down. Okay, so yeah, that's a little bit of a bullish argument, I would say. So yeah, hope you've all enjoyed this video. Does anyone have any other questions? Can you explain open interest? Sorry, I know it was talked about in the past, but lost my notes on it. Yeah, so I have done the whole cheat sheet on open interest. Where is it? I made this. Obviously, basically what you're looking at, you can just get ideas of whether, you know, whether you look at open interest moving up. And so basically it's make a print screen of this. This is like a cheat sheet for it. Okay, so if you see price rising, the volume and open interest increasing, then it's just showing you that, you know, new longs are opening, new money, and just looking at a very strong bullish market. The same if you're declining and your volumes, you know, your volume is to give the direct comparison, if you're moving down and your volume's increasing, your open interest increasing, then that's a strong downtrend. So your strong uptrend is obviously everything moving together, and your strong downtrend is everything moving together. If you see what's the good word for this, discrepancies or divergences between open interest, volume and price, then that can give you signs that you're in a weak or a stronger market, you know. Just take a print screen of that. It's, yeah, pretty good. Cool. Does anyone else have any other questions? How can you tell what point you would be moving your stop loss to break even? On what trade are you on about, Alex? Oh, I have no idea on what trade you're on about. On what trade are you on about moving stops to break even? On ontology? No worries. If you're on about ontology, I'm not too sure what you're on about. Yeah, I'm not too sure what you're on about. If you're on about this, at what point will we move the stops to break even? Well, yeah, I overall, I kind of done this of entering on the golden pocket and then moved my stops up to each higher low. Okay, and then obviously here we were hitting around the midpoint. I had my stop below here and got stopped out on the way down. Okay, in profits, it's only small profits, but you know, a few percent is a few percent. And obviously these moves look really small, but each move is actually quite big. For scalping in generally I'm moving my stop loss up to break even once target one's hit. Once I hit target one, stops moved up to break even. I don't move my stop up before hitting target one. I don't give myself space to breathe otherwise. So I would only move my stop loss up once I've hit target one, not before or not after, just once hit. And I'll just move it up to a higher low or two higher lows back. So remember what I said before, if you go like this, okay, let's say we hit target one now, my stop loss would be trailed from even, not from the last higher low, which would be here, but two back. Okay, so you go up like this, you go up like this, price is now here. Most people are going to have their stop here. I would use two back and put it here, okay, just in case you see something like this. Okay, so instead of using the last higher low, you can go two back. Okay, so most people, if it's going up and up and up and up, price is right here, they're going to have their stops here. You can look two back and put it here. Just a little help tactic. So yeah, that's I'm going to call it a night tonight. Hope you've all enjoyed the stream. I probably would recommend that you go back and review and watch and look over this several times, okay, just to get a feel for exactly how I've done everything. If you don't have any questions, then just obviously ask away in the group or next week, whenever you see me next. And yeah, hope that you've enjoyed tonight. Pretty interesting pretty interesting. I love the channels, but again, I use them on higher term timeframes across all markets. So I don't exclusively use this on crypto. I actually like it a lot on stocks as well, because that's where I like to do high term timeframe trading mostly. Cool. So I hope you've all enjoyed tonight. Thank you again so much, everybody. No worries at all, Alex. You're totally welcome. Sorry if I have missed any questions. I don't believe I have. If I have, it was not on purpose. You'll just have to message me. I believe I've gone through everything. So thank you, everybody, so much. I will catch you next week. Obviously, if you're a champion, I'll catch you on Sunday for some live trading, or just in the group later tonight, probably, saying what trades I'm in next. And the contenders, thank you so much. And I'll see you in the next stream next week. So thank you, everybody, so much. Hope you've enjoyed. Watch back again a few times if you need, and I'll catch you in the next one. Cheers, everybody. Thanks. Good night. Bye.